Good morning, everybody. I'm Charting Man Dan filling in for Lori, who will be back next week. Thank goodness. In the meantime, we're going to check in on the broader market, and then we'll check in on the cannabis space, the uranium sector, and some of the major names like Tesla and NVDA to see how we are shaped up today as we head into the weekend. Keeping in mind today is quad witching, and generally, quad witching for me means two things. It means number one, volume is not going to be a good indication on the morning and when comparing to previous days, because generally you'll see a big volume spike in the first 5-minute candle. And so that means comparing, the first 20 minutes of trading today to the first 20 minutes of volume yesterday. We don't have that comparison anymore. Number two, it means dividends oftentimes. So SPY today has been artificially adjusted for the dividend. So it's opening lower. And so just as an example, you look at SPY here, and SPY is trading just under the high of yesterday. But if you look at the futures chart, you can see, well, that's going to be confusing because the overnight trading, but it's trading a little bit higher. So just keep that in mind, that there's a little bit of a discrepancy between the two. And number three, it tells me in the final hour of trading, we can see a bit of elevated volatility. But that's really it. That's really all that it means to me. It doesn't mean a lot as far as how I'm going to approach the trading day, as far as, I'm generally not actively trading the last hour on a Friday anyways. So it doesn't mean a whole lot to me, but just something to be aware of. So checking in on the broader market, we do still have the bulls in complete control. And again, I'm just keeping it simple with the daily uptrend. As long as we set a higher low every single time we consolidate, the bulls don't have a thing to worry about. When that changes, then we can say, okay, bears are now proving something to us. And so we got that SPY support, 443.51. Anything above that is a higher low. And the bulls' goal into next week, or at some point next week, will be to break 452.08 if we're going to see this bounce continue. So that's the most important support and the most important resistance for me heading into next week. And for the NASDAQ, it is similar. The bull break on the NASDAQ is not as convincing. We did break resistance yesterday, but we're not over it by a significant amount. So if the bears were to control today, if we have a red day in the NASDAQ, and if we give back, if we get back over 50% retracement of yesterday's move, then the bears will have that heading into next week saying, well, we broke bull, but we didn't get any follow through, and maybe the bears can shift that momentum. But again, for me, it's the daily high or low. The most important support is 371.88, and the most important resistance is 380.83. And there's been a good job of rotation going on from the bulls, where when the NASDAQ has been pulling back, the financial sector has been real strong. We know the energy sector has been strong up at all-time highs when you adjust for the dividend. So overall, there's been a good rotation going on in the market. But that's it for me. Keep it simple. I will not look bearish with any swing trade perspective as long as the daily higher lows are intact. And once they're lost, then I'll open up that side of things and be more open to it. But in the meantime, keeping an eye on the bull side of things. So the dollar is still extremely strong. Daily bull flag confirmed. Same thing here. The dollar bulls have complete control as long as the daily uptrend is intact. 104.42 is our last higher low. And we are just going straight up for months in a row at this point. And it's having the most negative impact on the metals. There's the most tick-for-tick inverse relationship between the metals. It's not impacting oil. It's not having a major impact in stocks. It definitely is impacting crypto a bit, but easing off a little bit. We'll look at Bitcoin in just a moment. But just keeping in mind that in an ideal world, if you are a bull, you want to see the dollar weaker, and just making note that it is not weak at all at this point. And so the metals are struggling a bit. Granted, the daily bounce is underway, so bulls are liking that. This is gold attempting to shape up a weekly higher low. And gold bulls really want to see the dollar consolidate next week to try and help with this weekly higher low. And silver, same deal. Big drop yesterday, but a solid bounce. Testing short-term resistance and trying to hold this double bottom at weekly support. And the last time we tested this weekly support, that's when there was a major shift in the correlation with the dollar as the bulls showed up. And let's see if we can do that again. It's now pretty much a triple bottom. And so I'm still keeping an eye on the metals into the end of the year. Kind of, one eye open. As I keep saying, our attention span as traders is opportunity cost, because there's so much going on in the market. You've got uranium names, cannabis names, psychedelic names, Tesla, NVIDIA, whatever it is. We have to limit that down a little bit. And so, I'll check in on the metals every day, but my attention is elsewhere. But recently I said, heading into the end of the year, there's two spaces that are positioned for potential breakouts, and it was the metals and it was uranium. And right now uranium is falling through significantly and the metals are not. So we'll see if that changes over the course of the next couple of months. But the reason I'm still interested in the metals is because gold on the monthly time frame is still hanging around near the triple top all-time high. And just knowing that if the bulls can get over that level, that's when things open up in price discovery and when things get more exciting. Oil is all bulls, just grinding up. 4-hour time frame is our guide, trying for a higher low, lots of space for it to form. And we're approaching, at least on this futures contract, which is for October, we are approaching the recent high of 95.40 of where we came from. So that's pretty significant with this turnaround longer term. And keeping an eye out for a temporary top, but we will just be looking for a daily higher low to be the result of that next pullback. And as I mentioned, the energy sector just grinding up with a new all-time high when you adjust for the dividend pretty much every day this week. Not a massive breakout, but certainly still very strong. Natural gas, watching for the potential of this 2-day tightening range to shape up, as we've been talking about over the last few days. So just viewing this as a potential equilibrium, and the bears need a little bit more follow through for that to be the case, but keeping an eye on this tightening range into next week. And Bitcoin, daily bounce is underway, but 4-hour uptrend technically just lost with a little bull flag attempt that failed. And we know that we have to confirm a daily uptrend. For me, when's the last time Bitcoin confirmed a daily uptrend? It's been a few weeks. So whenever we top out, we must set a higher low and higher high for us to say, okay, bulls are proving a little something to us off of this support. And again, this support zone for Bitcoin, we've held it essentially, the last 5 weeks in a row. And so can this most recent hold turn into a daily uptrend? If not, it's just a temporary defensive support, and we're going to test it again, within the next week or two. So we have to confirm that daily uptrend on Bitcoin from here. Before we break it down further, one note, we got a free ebook here about the anatomy of a trade. It's a 4-page ebook with some good info talking about ways to find your ideal setups, when to scale up and increase aggressiveness, when to scale out and take some off the table. We're going to be talking about those concepts a little bit, posting that in the chat room right now, or in the YouTube chat, and free information. Check it out. All right, so attention for me today remains on the cannabis sector, which has been the case for the last 2 weeks. There was a headline overnight last night, late, right before after hours closed, and the headline was not that. The headline was Senate Banking, Housing, and Urban Affairs Committee is expected to hold a markup of the Safe Banking Bill 2 weeks. And 3 sources familiar say that's coming up. And again, what we've got with Safe is the boy who cried wolf situation, where anybody following this sector closely has time and time again, it's been years in the making. And at the end of last year, we got some good misinformation, incorrect information, where everybody was real sure this was the time. 75% chance, the prices responded to that. You go back and look at MSOS back then, and this is the run-up with the market pricing in Safe was going to be for real this time, and then, oh my God, it's not happening. And we dropped 60% in a few weeks. And so there is a ton of skepticism, rightfully so, in this sector around the government. Makes sense? To talk about the last 90 years. There's a good reason. But people are thinking this time is different. Maybe it is, maybe it isn't. The one thing to say, have a game plan for both scenarios. Are you going to exit if Safe fails this time around? Are you going to trim some position? If it's for real this time around, are you going to increase your position? Just plan it in advance so you're not scrambling when a headline hits that may have surprised you. So just keep that in mind. But as far as today is concerned, we saw yesterday MSOS daily inside bar bull break. The break at $9 was a good sign. Increased position a little bit on that break. And now we have a gap up open on this news shaping up And the important thing here is it's new bounce highs, and we are in an area with a lack of resistance. So we're looking at 10 psychological. There's a level at 980. It's not a very significant level at all, but 980, 10, and 1030 are the next levels that I'm looking at. And it's the kind of thing where if I had an overweight aggressive position, I would be taking a little bit of profit on this gap up just because that's automatic for me. You know, if I have a large position and we gap up, I take some profit. But with my current position size, I'm nice and comfortable, and I want to see a strong close into the weekend for buzz to keep building, for, you know, the message boards, the social media to keep it going. And that's what we're looking for today. So, you know, a gap up open is nice, but don't give back too much on profit taking, and bulls just ensure that you can close strong. And, you know, the last thing we want to see is a big upper wick and a close near the low of the day. We want to see maybe, you know, a morning push up, break 10, that would be great. Healthy consolidation midday, pull back a bit, maybe an hourly bull flag, and then a close near the high of the day into the weekend. That would be ideal scenario. And what you also want to see in this sector, regardless of what names you're trading, you want to see every name break the high of yesterday. So even if I'm all MSOS, I want to see CGC break 148. And we're going to test that first thing. And the reason I want to see that is because that's just confidence. That's just buzz and confidence building in the sector. And so I'm still watching for CGC, anything under 192 to be a daily lower high for the potential of a tightening range here. But if we break the high of yesterday, that will tell us the daily lower high is not set yet. ACB, we want to see bulls break resistance. That's 915. Good, gap up. So we're breaking it. Daily high or low is being set on ACB. Same deal. Anything under 115 will be a lower high, but bulls have full short-term control. So that's a good sign. And again, on any consolidation, just a healthy hourly high or low is what we need to see to continue strong. So that's what we're looking at today. Psychedelic names got a little bump yesterday as we've got phase 3 trials for MDMA and a new drug application with the FDA. And so CMPS, highest close that we've seen in over a month. And again, CMPS, if we can just get some volume and break this tightening range and get up over 1086, 1115 resistance, then it's so thinly traded that, you know, that momentum can pick up a bit. And obviously the cannabis space is getting a lot of attention right now, but it does benefit the higher risk, higher reward psychedelic space. I view the psychedelic space as almost, you know, the cannabis space, but more in its infancy. You know, less dollar volume, less interest, less progress, you know, politically and with individual states, but same concepts overall. The potential for law changes, the potential for medicines, buyouts, all that stuff. So definitely worth paying attention to. MNMD is the other one that I watch, and it's in a daily uptrend. Bulls need to get over 951 to keep that uptrend going. And again, they're very low volume, very low liquidity. Normally, I look at these names and say they don't meet my criteria for volume, but I do have some long-term swing positions in these names just for the potential that CMPS breaks that range bull, because I've seen so many of these sideways long-term ranges this year break bull and bottom out. And again, the example that I always give is Chinese EV name, XPEV, did it down here and then got that pop. So essentially watching to see if we can get that pop. Other than that, uranium. So CCJ. Is it time to take profit in uranium? That depends. Are you in overweight positions? Are you very significantly allocated? If you have just a smaller position that you want to hold longer term, then you're probably not looking to take profit here. But this is starting to get a little bit of FOMO euphoria type feel to it. You know, I read a tweet yesterday where someone said, this uranium move is just getting started. Some of these companies are going to go up tens of thousands of %. As soon as I see that, that's starting to get towards peak FOMO when we're about to see daily consolidation. So that's just one little factor, but people getting a little bit ahead of themselves. So we have another test of the high on CCJ. First thing, small gap up open. I did take a little bit of profit in CCJ yesterday. And, you know, every X% up that we go, every dollar up that we go from here, I'm going to keep taking profit. And then I'll look to add some position during daily consolidation, we'll be looking for hourly oversold conditions for an entry. We'll be looking for a daily high or low next consolidation. But I watch CCJ as the leader and URA as the ETF, which has had a high volume breakout. We're going to test the high of yesterday first thing. And again, it's just this sector has been in a monthly, weekly, daily uptrend for years. And we've got CCJ at 16-year highs. We've got URA at not even 16-year highs yet, but there's a possibility if we get over 29.65 to open things up a bit. We've got URNJ, a low cap name, is testing all-time highs. This is a low cap ETF. So you don't want to be chasing up here and buying now, but you want to be writing it down next to your computer and saying, okay, maybe I'm scouting entries next hourly oversold conditions or next daily higher lows. We know the best risk and reward for entries in uptrends is during consolidation. And so we're going to be looking for that from here in this sector and anticipating that this sector can keep momentum going for a while. We just know that healthy daily consolidation is a part of strong uptrends. And we're going to be looking for CCJ to try and hit all-time highs this year. That's 20% away. Maybe this year. Maybe first thing next year. But paying attention to uranium, as we have been, thanks to Red Devil in our chat room, who's been holding down the space and pulling out his hair, telling us about this sector's opportunity over the last year plus. And it's coming to fruition, which is nice to see. All right. So now some of the more major names. I'm keeping an eye on Tesla in a swing position there and daily inside bar bull break yesterday. And we're going to test the current high, 278.39 first thing. After that, I'm looking up at 280.93. And then there's some gap fill back there. And we can see Tesla, a little bit of a higher open. Anything above 270 will be an hourly higher low. So whenever I approach the morning and I look at a name that was a lead bull or a strong name the previous day, I say, okay, well, I'm not going to chase, but I know that the next time we see hourly consolidation, the most likely scenario is that an hourly higher low is going to form. And so I can establish that as part of my game plan and say, that's a trade setup that I'm looking for today. Once we get hourly consolidation, I zoom into the 5-minute time frame and I watch for signs that the 5-minute trend is changing back to the bulls, whether it's a falling wedge, whether it's an inverse head and shoulders. And so that is something for Tesla to be keeping an eye on. I'm lighting some sage here. I made some homegrown sage. That's how you make money. If you light sage, you make money trading. So, looking for an hourly higher low on Tesla. 278.39. We'll see if the bulls are able to break that level. And we're watching the hourly uptrend. NVDA has had relative weakness. And so I'm keeping an eye out. It's again, I have names that I'm looking at if the market stays bullish and names that I'm looking at if the bears prove something to me. And if the bears prove something to me in the broader market and in the NASDAQ, I'm watching NVDA. And right now, if NVDA does not break 466, it remains a weaker name. And SMH, the semiconductor ETF, has a brick wall here at 152.19. That's a triple top this week. And so we're keeping an eye on that level as well. And right now, we're struggling. I mean, look at the last 6 days in the semiconductors and look at the last 6 days in the NASDAQ. It's a little higher low and a higher high versus a brick wall of resistance that the bulls are unable to get over. So there's relative weakness in the semiconductors and there's relative strength in a bunch of the sectors we just talked about and in Tesla. Amazon is showing a little relative weakness. Again, we shift. We had relative strength for this move up. Yesterday was a little relative weakness, and today pre-market, we're going to test the low of yesterday first thing. Now, how do we know relative weakness at a glance? Well, I can look at the NASDAQ. Are we testing the low of yesterday? No, we're not close. And so we look at Amazon testing the low of yesterday first thing. If 142.95 breaks, we're in daily consolidation. We'll look for hourly oversold conditions, but just a bit of a breather after a very strong move. I mean, we have to keep in mind in 5 days, we did go up almost 9%, which is a huge amount for something of the market cap size that Amazon is. And one thing I've been watching is the rotation kind of game that's going on between Amazon and Apple. When I'm most often the pattern is these two names are very correlated in both directions, but recently, ever since Apple's headlines, they've been a bit inverse. And you can see Apple started to sell off significantly September 6th and 7th. Amazon, September 7th, kicked off the bull move, and then it ran while Apple continued to struggle. And so yesterday, Apple, its most bullish day in the last 5 days, and Amazon yesterday was one of the more bearish days in the last 5 days. So just a little initial observation. And it's the kind of thing, whenever I recognize a new observation in the market, I have to observe it, keep playing out. Same thing with a pattern. If I draw, this might be a rising wedge, and I draw that pattern, I want to see it continue a couple times now that I'm watching it, reject from my resistance line again, bounce off my support line again to tell me, yep, I'm on the right track. What I'm drawing, I'm still observing shaping up. And so I recognize, all right, Apple and Amazon, a little bit of an inverse relationship, not very strong, but I know if over the next 3 days I continue to see signs of that, then okay, that's something to be paying attention to. But there's so many initial little observations that I make in markets that then just fade and say, nah, that's not really something significant to be keeping an eye on. And I got to make the observation and then watch that observation keep playing out now that I'm watching it happen live. It's almost like, I don't want to get too meta here, but quantum physics, the slit, I don't want to confuse people, but the slit experiment, where when you're watching something, it potentially acts differently than when you're not watching it. So I want it to continue acting in the way that I observe in hindsight while I'm watching it live. All right, we got a couple more minutes here before Chart Guys Lamont is going to go live for the Open for Chart Guys members. I'm going to do a cannabis video over the weekend, maybe even today. I'll put that out after hours, talking about the sector setup and what we're looking at into next week, seeing how we close today and all that. Other names that I'm keeping an eye on, let's see. So QQQ, bit of weakness the last half hour. The financial sector has seen a good bit of strength recently. WBA is a name that I've been watching. And TAN, same concept. So WBA, all bears, leveled out a little bit, and now is flipped into the daily oversold bounce. And so the question is, can WBA bounce significantly enough to shape up the daily trend change to get these longer term time frames oversold bounces underway? And we've started that bounce yesterday. And TAN, the solar sector, has a base of support from way back here. The lowest level that we've seen in 3 years, 56, 55.50, 55.30. And you can see we're just battling to hold this level. And so I'm watching this channel now, this range that we've been within for the last month or so. And the direction, I guess the last 3 weeks, the direction that this breaks is going to be key, because the Bulls are playing defense. We cannot deny that. And the question will be, can the Bulls turn this defense into offense? And so, again, this is one that, I'm not looking to make any entries right now, but I'm keeping an eye on it for bigger picture, because I know that longer term, if we base out here and if the broader market stays strong, then we can definitely see the scales tilt from supply outweighing demand to demand outweighing supply. And so the solar sector is going to be one that I'm going to continue to observe into next week. In an ideal world, I'd like to see one more lower high compared to 59.46, tighten up all next week, and then eventually get a bull break if we're going to see some follow through. So we'll see if that ends up shaping up for us. There are birds definitely in the background right now, but it's mostly crows and ravens. I guess it's crows. No turkeys at the moment. Tilray is stuck, TLRY. Bulls want to see 310 break here across the board. We want all, and we are, that's good. But it is range bound. So anything under 337 is just a daily lower high. The one good sign is that we broke 281 support and confirmed a daily downtrend with zero follow through. So what I want to see, having no position in TLRY right now, is a failure to break 337 and then tighten up. And then next week, we'll look for a tight range to potentially break bull to maybe act as a laggard and to trade that as a laggard, just like Cron acted as a laggard with its bull move on Wednesday. And so that would show us, again, rotation going on in the sector. Maybe bulls take some CGC profits, bring them over into a tight TLRY range breaking bull. So it's not dead, it's just not as strong. And hopefully this tightening range will break bull and it will get a bit of a chance from there. Armed with the IPO yesterday, got to be real cautious on IPOs. They're very thinly traded, and you have to be playing off a clear level. And so 58 is a key support this morning, as is the low of pre-market, 62.66. So you have to protect yourself here. If we break 66.28, it's pretty much blue sky breakout. And so we got a lot of momentum at the end of the day yesterday. So keeping an eye on that. But again, just got to be real protective. I trade IPOs just not often. And when I do, it's, I make an entry, I sell half real quick, and I put a break-even stop. And if it runs, then great, I benefit. If it doesn't, I don't lose anything. But IPOs can get a lot of people in a lot of trouble if you are not disciplined and not using those stops. Because again, it's so thinly traded, it goes 5% like it's nothing. Caution scaling in to momentum. I would much rather, so comments scaling in to try and short oil. I would much rather than scaling in, just look to play off a clear level. Give me a level, and that's a level to short off of. Because obviously the danger is, it could be a part of your game plan. But generally, if I'm scaling into something, I want it at historical extremes, or I want it playing off of a long-term level. And right now, oil doesn't really have either of those. It's overbought on the daily, but it's not historical extremes. So you just got to be a bit cautious, because scaling in can definitely, again, if you're not disciplined, scaling in can be a disaster in certain situations. These days, I'm much more liking saying that's either the top or I'm wrong, and playing off of a level and having a very clear stop level. All right, appreciate all the likes. Let's bump that up over 100, please. Check out that free ebook, weekend video for cannabis stocks and psychedelic names. We'll check in on those as well. And other than that, I hope you have a fantastic weekend.